What's going on, everybody? It's your mentor proper section trader. So on today's video we're going to have a trade recap about a trade review about XAUUSD. So I'm going to move to a bigger time frame structure so that I can explain everything to you. So if you are new to my channel, don't forget to subscribe and also to click that like button as well as that notification button so that you can be updated when I post new videos. So I'm going to begin my analysis now. Let me show you. So you can see here that we have our first resistance over here. This is a daily time frame, don't forget that. So we have our first resistance over here, which is our main resistance. So our yearly resistance, I can say it's our yearly resistance because you can see here now, I think it's been here since we have this previous resistance. So you can see now that I'm going to identify everything from a bigger time frame to a lower time frame and the entry and everything. So let's begin the analysis. So you can see now that here we have our first touch over here, and our second touch, third touch, and our fourth touch on the resistance. So you can see now that I'm going to draw my minor trend line over here. Let me show you. I'm going to draw my minor trend line from here to here. So you can see now that we have our first minor trend line, which is acting as a resistance, which also coincides with this level. So you can see now we have our first touch, second touch, third touch, and our fourth touch here, which coincides with this level, so which is our previous yearly resistance over there. So we're anticipating for sellers to take place around this area. So what I'm going to do now, I'm going to move to a lower time frame. I'm going to move to a lower time frame, which is a 4-hour time frame. I'm going to move to a lower time frame to view the market structure inside. So let me do this first. Let me draw our minor support level, which will act as our take profits as well, which will act as our profit taking as well. So you can see now that we have our minor support over there. So I'm going to identify my first TP and my second TP and my third TP. I'm going to first identify the first one on an H4 time frame so that you can see what I'm talking about. So you can see here now that we have our market structure over here. Let me move to our time frame. So you can see here now that we have our market structure here, which is a rising wedge. Here is our market structure, which is a rising wedge. We had the market breaking the structure below for a little bit. So we're anticipating now for the market to push to the downside after everything that it has done over there. So you can see we have our rising wedge over there. Here is our rising wedge. Our first take profits will be on this level. Our first take profit will be on this level, and our second profit taking will be around this level. So you can see now that our trading plan has been composed and we are waiting for the market to react to this level. It might create a head and shoulder. Let me show you what I'm talking about. Let me move to a 15-minute time frame for the entry. So you can see here now that we have our level after the short range over here. Let me move to a 15-minute time frame. So now we're anticipating for the market to tell us how does it react to this level. How does it react to this level after the market has bounced for the first time and the second time and then broken to the downside and reacted to this level, which is a minor resistance over here of the structure, which is a rising wedge. So we're anticipating for the market to come to react to this level now, or either it has already reacted to this level with this touch over here, which is also can be called as a head and shoulder. You can see now that we have our head and shoulder structure inside the rising wedge over there. Let me show you the head and the tail and everything. Let me show you the head and shoulder. So you can see now that we have our head over our left shoulder over here. This is our left shoulder and this one is our right shoulder. and this one is our head. So you can see now that we have a head and shoulder inside the structure which coincide with the rising wedge. So now we are anticipating for the market to push to the downside. So everything that has happened here had happened for a reason. So you can see now that the market was in around a support area over here. So we have our extension of a structure over here, which is our bullish flag. So you can see now that is why the market has pushed to this side, so that it can react to this area, which is our area that we are anticipating for the market to touch, or either we're going to enter our trade if the market pushes to this side. So our stop loss will be around this area, in the middle of this area, because we have our previous resistance over here, which was respected by this level, which is they say a resistance turned into support, then it is turned into resistance again. That is the explanation of a head and shoulder. So you can see here now that the market has been turned into our previous resistance has been turned into support over here, and then the market tries to pull to the upside, then broken to the downside, then retested to the previous support, which was turned into the which has turned into support over here. Let me show you. We have our resistance over here, we have our support over here, and we have our second resistance over here, which turned this level to a resistance. So you can see now that we have our respected level over here. So we're anticipating for the market to move to this side, or either push it to the downside. So if it pushes to the downside, I'm going to anticipate my stop loss, my set stop below over here, so that I can catch the move. So let's move to a bigger time frame now, which is 2-hour time frame. Let's minimize the charts a little bit. So you can see now that the market has to push to the downside. As like I said to you, you can see now anticipating for the market to move from, let's say we're going to execute our trade around this area, and our stop loss will be safer between here. The risk is still the same as the reward. So you can see now our first touch will be around this area. Our first profit taking will be around this area, and let me identify my second profit taking. Here is my second profit taking, and here is my third profit taking. Let me show you. This is my third profit taking over here. This is my third profit taking if the market is going to push to the downside. So if the market is going to push to the downside, so we don't know what's going to happen next on the market. So that is why the anticipating method is much better than doing things that you don't understand. So we have to anticipate what's going to happen, or either identify the market structure. So our third profit taking or will be around this area, or either I'm going to trade gold for almost this month, and next month I'm going to execute more trades are coming on gold on this move from. I'm anticipating for something like this. Anticipating for something like this to happen on gold now. The push to the downside, or I can say the move to the downside, must be like this. So this is what I'm anticipating from gold now. I think I'm done, guys. Don't forget to subscribe to my YouTube channel, and also click that like button and also that notification button as well, so that you can be updated when I post new videos. Have a successful trading journey, guys. It's your mentor proper section trader. Thank you.